good of you to join.
Oh, these volatile markets, my goodness me, Christopher Beecham.
So volatile you were late to start the show.
Too busy trading futures.
Yes.
Right, what a weekend. My goodness me, it is Trade Live with IG. Wow, since we were last here, we've had a 4% fall, followed by, making half of it back.
The Dow futures up 400 points and NASDAQ futures up 300 points.
Whew, now that is a weekend. So we're going to go through all of that. We're going to find out how Chris Beecham's weekend was. And you're going to hear my latest reason why gold is definitely at its top. What else is coming up on today's show? Let's go to find out. Right, Beachy, we're through with each other until 8:35 when Peter Hambro is coming in with...
Are we lucky?
Peter's in this morning. I believe he's bringing a little treat in with him.
I think so. Not so little from what I hear.
Right.
It's quite big. Quite a big treat.
Okay, so that's at 8:35. And then 9 a.m., of course, US pre-market. I think that's Angeline's espresso, isn't it? Hang on, sorry. Can we just go back to the first page there? Are we saying Angeline's only doing one segment today at 8:35? That's it.
Well, it's about time you covered most of it, isn't it, really?
You'd almost think producer Phil isn't in this morning.
I think he is online, isn't he?
He's online because he can't walk currently.
No, he is confined to his chair, as it were.
Do we know what's happened there? So everybody send producer Phil a get well soon.
He's fine.
What happened to him?
I think he's had an ingrown toenail removed.
Oh, is that it?
Yeah.
And he can't make it in?
Well, they put a massive bandage on your toe, don't they? So and you don't want somebody to step on it, do you?
Yeah, I tend not to look at pictures. He's saying, I sent you a picture of my ear.
Oh, you should look at a picture. Oh.
Right, how is everybody then? I want to hear all your trading stories. I really hope nobody got stopped out on the crypto on the way down on Saturday morning, because that is the biggest ever liquidation in crypto. Chris Beecham, were you stopped out in your crypto?
No, I was not, because I don't have any. That's fine.
Oh, shocked.
Lots of unhappy people, I think.
I bet there is.
The world.
Yeah. An absolute mess, absolute carnage out there. Tens of billions of dollars liquidated on the crypto exchanges across the board.
And a crypto CEO found dead in his Lamborghini in Ukraine as well. There you go.
Sorry, what?
The crypto, I'm just reading this now. I just Google crypto and it says crypto CEO found dead in his Lamborghini in Ukraine after 19 billion market wipeout. So there you go.
In his Lamborghini.
There's a metaphor there.
It's an interesting one. Right, good morning to you all. We got Funky Gibbon online. We've got Money Geek. I thought that was going to be Monkey Geek. I thought Monkey Man.
I thought you were the money geek. I thought you were the money geek.
Yeah, and born in 85 as well, same year as me. Money Geek 85, good morning. Neil Brewster Maturin is here with his Spotify playlist. London Guide's back. Hola to London Guide. Good morning, Julian. Julian, thank you for the comments on the TikTok at the weekend. And then Wing It and Kate Murphy with us early. What's going on there, Kate Murphy? Normally you're at least half an hour late. And yeah, Boise, good morning to you as well. So well done on your futures trade last night. So do you want to hear my latest red flag in gold?
Go on then.
So I was at church yesterday. I was at the 9:30 service. And during the sermon, the vicar used gold going through 4,000
okay.
in his sermon.
All right, I might give you that one.
That's it.
Well,
that is the top of the market.
You said last week when it was the FT headline and they used the word FOMO, that was the top, and it hasn't topped yet. So,
well,
that's quite good. When someone said gold is mentioned 400 times in the Bible.
And apparently, Jesus spent a third of his time talking about finance.
There you go. And no value stocks in it, so there you go.
Right, let's go on to some overnight action. Captain Cucumber joining us online there saying, aye, aye, rise and shine. Well, rise and shine, you had to over the weekend because there were opportunities everywhere. IG weekend markets. Oh, thank you. That has paid for another holiday.
Sometimes it's
It was free money they were giving away.
Yeah, it really was. These crises get shorter and shorter, don't they? I said this to Ange before we came on. The life cycle of the crisis goes from, what was it, 3 weeks in April to 2-3 days, if that.
Well, it depends if you count market open time or. So take us through Christopher Beecham. What happened? Because I was, when the second comment hit, I was at a charity event in Ministry of Sound. So I was trading futures outside in the queue, waiting to get into Ministry of Sound. Were you in the same predicament?
I wasn't at the Ministry of Sound. I wasn't aware there was a government Ministry of Sound, but I don't know what that is.
So right through what happened.
A Truth Social post, a very long Truth Social post on Friday about China and how they were manipulating or banning the export of rare earth metals. And this had then angered the man in the White House, and he would be looking at imposing 100% tariffs on China. And understandably, markets didn't take this very well.
And of course, this is all over rare earths, isn't it?
Yeah, this is the story, the moment of the idea that rare earths, which aren't actually that rare, I think if the geologists are
good
to be
marketing.
believed. Yeah, it's all in the marketing strategy. They're not as rare as people think, but China, obviously having invested vast amounts in developing them, has the edge.
No, keep the chart up, please, guys, because I want to show the time here. So 4 p.m. was when the original hit. That is, of course, important to you because we do see the European indices bouncing as well this morning. But the news came out just half an hour before they closed. So we can see the original drop was from 6,740 down to 6,640. So the S&P dropped 100 points. That's about 1.4% in European time. But then subsequently,
just feel for Axel, who just sent out his market comment for 10 to 4. So obviously, you know, today and the weekends quietly, blah blah blah, and then suddenly.
And our Art of Investing podcast, obviously, it was released at 4 p.m. Just as the headline hit, although it was recorded on the Thursday, so we get a little bit of leeway there. However, we then dive bombed from 66.40 down to 6,560. But it wasn't finished then. The market was closed, but then came out the 100% warning, and the futures went another about 70 points lower.
Absolute rout.
Absolute right. You are not kidding.
For a market that had seen no volatility for weeks, and this is when they react like this, because markets hate uncertainty, markets hate surprises. There's your surprise.
Well, no, I'm sorry. If everybody's all in, then you're vulnerable to things like this because you've got no risk discipline and you've got no cash on the sidelines.
So after weeks and weeks and weeks, everything just got a little bit too quiet. People assumed that it couldn't go down. Let's put it that way.
Never goes down.
It never goes
30 basis points a day. Every day.
It just slowly grinds, and that's the time when you should always just be careful. You should be aware that it's going to catch people, because when everyone's one side of the boat and everyone runs the other side of the boat, that's when it gets volatile.
And when it's forced, it's not by choice, is it?
Yes.
That price action is when it is forced.
That line about the market is a room with a very small door to get out of. When everyone wants to get out at the same time, it gets very ugly.
Yeah, the buyers dry up.
Yeah.
And
but what happened next?
Well, we got an interesting message there from Sig Sire. Someone shorted 150 million of Bitcoin 1 minute before the
this was in the Telegraph, wasn't it? The crypto route, and Coinbase was saying we saw that come through.
And this is great because you've got their address, so you know everything they do in future, and you'll be able to pin down that they are most definitely acting in a bad way.
Should that ever become an issue? A case, as it were.
Boise points out also that it coincided with Trump not winning the Nobel Peace Prize. I think it's a 100% to do with that.
Yeah, yes, everyone was jokingly saying it's because he didn't win and therefore he's in an unhappy mood to decide to kick off with something.
Hey, that's not a joke.
Friday ended in a very interesting way, didn't it? That was certainly. Yeah. And we had worries about what will happen this morning. We had talking to the press over the weekend. Will it be a volatile Monday open? No, because we've all had a helping of tacos this weekend.
A large taco, Mr. Beecham. And that taco is giving you a lot of relief because the Nasdaq currently trading up 1.78%. Reminder, it was down 3.5%, so it's pretty much exactly gaining back half, as is the S&P 500. Now, Chris, why is it only gaining back half of what it lost?
Well, markets always fall 3 times fast and they rise. That's the old saw, isn't it? It takes time for it to pull back up again. Understandably, people are slightly nervous that that wasn't the end of it, I think.
Because there's 2 parties involved here, isn't there?
Yes, but you also had China saying, we're not really trying to impose an export ban. So there was an interesting comment from China to say to that effect that they're not trying to deliberately. That you might argue this is window dressing, but with that, and Trump appearing and saying, "She had a bad day," or whatever it was, I think was his phrase. He's a really nice guy, this kind of thing. And suddenly, because as it was really beginning on Friday and the sell-off was sort of gaining steam about 5 o'clock, we were saying, this will probably end at some point very soon with a True Social post that says, I had a lovely call with him. He's a really nice chap. We're going to come around and have drinks together one day, that kind of thing. And it's all fixed. And it bounces back again. And it seems to have developed that way.
Why did the market react so much in the first place when it was obvious that, you know, as soon as he throws out the number 100%, you know that it's just
come out of nowhere. Yeah, it's just the guy on the True Social. Because
Jermaine Greer wasn't happy because he hadn't been made aware of it.
James Greer, not Jermaine Greer. Slightly different person. It's simply because I think there's this sort of nagging fear that trade war hasn't gone away, which I think is right. There's always that underlying current of almost fear within even the market action in the last 2 or 3 months, which has been steady rises, that we are one True Social post away from a sell-off. And so it proves. And this is the reminder of investing in the era of Donald Trump. We learnt it 10 years ago, whatever it was, 9 years ago, that there's always something he could do. He throws a truth bomb or whatever, I think. That's the problem.
As Friar Tuck says, China definitely have the upper hand here. They've got the better.
They're way ahead on their extraction, yes. If they're, and they're negotiating really hard to sort of attain a sensible position here. Yeah.
Is that what Trump said to Zelensky that time? You don't hold any cards?
You don't hold any cards. Exactly.
China say, we make the cards.
Yeah. And we have them, exactly. But they are really putting export curbs on NVIDIA chips, aren't they? They are really clamping down now because you've got DeepSeek and I forget the other one is manufacturing chips to sort of replace NVIDIA. But for the moment, the market reaction is here. VIX is back down again.
But again, it's only half.
It's only half.
Back down, isn't it?
These things, that is the way of these things. It takes time. It doesn't reverse itself entirely. It will take time for it to get back to where it was. But that's why we have. You can look at them as opportunities, but as I say, it's a reminder that these things can happen, really, and that he is.
It was the market was begging for something.
Yes, and if you're me and you're thinking, I'd be quite like it to rally into the rest of the year. That'd be nice, you know, from an investing standpoint.
Of course you would.
But you think, but we could do with a little dip. We've not had one for a while, so we were kind of overdue one, weren't we? And that's the kind of thing analysts say this really isn't helpful. Oh, it's due a sell-off. I can't tell you when, but it's going to arrive. And so it's almost nice to say, well, there's your sell-off. Maybe it wasn't quite as long enough as people wanted, but that's the kind of moment you get in this kind of market at the moment.
Okay, so let's go to a poll then. Do we have somebody to put the poll in? That's the question. Producer Phil's sitting at home.
Well, he's not using his toe, is he?
Fingers are working, are they? Right, so what should the poll be then, Chris Beecham?
Was that it?
Is that it?
Are we done?
Have we seen the lows of the market for the rest of the year? Have we seen the lows for the market of the rest of the year on that drama that we had on Friday? So it would be 6,490. God, I was right the first time. 6,490. Is that the low for the rest of the year? Or are we going to test it again? Is there a retest coming? Right, so we have a look at the, let's have a look at the futures first. There they are, up 1.3%. Unsurprisingly, the Hang Seng did suffer. Hang Seng was down 2.5. We've got the FTSE looking bulletproof, absolutely bulletproof, which is what we had. I had an argument with the chairman. Chairman, if you're online, Poppy, who told you that if the US sold off, FTSE would be bulletproof? No. The FTSE will go down as well.
Who said that?
My chairman.
Oh.
Yeah. And then oil. Oil had a huge move down on Friday as well. More drama. There was a lot of drama around, wasn't there?
There was a lot.
And
it all comes at once.
Yeah. So, front page of the newspapers today. Let's go straight to the Financial Times. And of course, that wonderful news that the hostages are being released as we speak. 7 hostages managed to come out after, is it 2 years?
2 years. It's just over 2 years now, yeah.
Oh, my goodness. After 2 years. And the first person they're going to meet is Donald Trump. Welcome. No, none of them are going to turn around and ask to go back again. Chris, you cannot suggest that. Right, so we've got some stories in the FT, though. The first one is on Novo's. Novo Nordisk's lottery ticket. Can obesity drugs help treat Alzheimer's? Now, we actually get the results on this pretty soon. We get the results in this quarter. And, of course, that is using the weight loss drug that Chris so successfully has used.
I know.
On whether it also helps with Alzheimer's. They don't know quite why it helps with Alzheimer's, whether it stops the blood vessels or protects the blood vessels in your brain, or whether it reduces the sugar getting to your brain, and whether that's one of the causes of Alzheimer's. But there are huge tests going on, 1,800 people involved in 2 tests there. So we get that. So Novo's, if there's even small statistical improvements that show there's something there,
that share price would go bananas, and that's had it, because it's where's the Novo share price? It's had a horrible time of it.
Oh, it really has, yeah. Are we getting your screen up there?
Yeah, sorry. Can we get it there?
How long is that going back?
That's daily. So this is.
Oh dear, oh dear.
You do the monthly, so the weekly chart. So when did the drug first come out? Somewhere around here, I think.
Yeah.
When the share price has gone bananas, and it goes to something ridiculous on a PE ratio, and now it's understandably right back down to where it was before, and there's kind of. It's better value now in valuation terms than it was, obviously, in 2024.
Thanks for that.
But the valuation, the share price is not exactly encouraging.
Exactly. So you've got that lottery ticket. So just beware, that will come out sometime this quarter. Financial Times also talking about how Asian markets have slid. We've covered that there. Hang Seng was down 3.5% at one point. And the CSI 300 down 1.8, South Korea down 1.4, and Taiwan down 1.8. So lots of weakness there.
It's the first 2% drop for the Nasdaq 100 since April, wasn't it?
Wow.
Yeah, the first time it's dropped down 2% in a day since April.
Right. And 3%?
Probably April as well, isn't it?
Yeah, yeah, it'll be the same day, won't it? Right, will you be running to buy this one? Strava coming to the US exchanges. We've got a new IPO. So let's see how many people use this. You a user of Strava? Not the right audience, is it?
No, not really. No.
So yeah, we're seeing Strava come worth up to 2.5 billion, I think it was.
Okay.
Do you think that's value? Would you have we got
do you have to pay to use it then, or is it there's advertising on it? How do they make money off it?
There's advertising. There is a premium version for proper runners, and those a lot of half marathons on at the weekend. Wow, everywhere.
Oh really? Well, it's nice weather.
Yeah. And then the proper marathon over in Chicago as well, the full thing. Let's see, we've got 43 votes in for have we seen the market lows? I haven't voted yet.
You're only allowed one vote, by the way.
Ooh, no, start of a major trend change he's put in as one of the options.
Okay. Strava was the app that they told the US military personnel not to use, wasn't it? Because they were posting their runs and it was giving you the outline of all the bases.
Well, it was the Russian sergeant, was it, that used it and ended up dead because they could see exactly where he was going to be at the exact time of day that he was taking his runs. And of course, Ukraine just
Yes.
So that was that would be why they were fighting against
security. That's what they use.
Yeah. Good. So yeah. So we've got that story, and then the final story in the Times that I wanted to look at was actually one on British Telecom. So BT saying that Openreach, it's too early to call when the losses will stop. It actually means customer losses here. It doesn't mean financial losses. But Openreach losing a lot of customers to these small competitors and the altnets, as they call them. So, you know, BT share price having done so well, it's interesting to see that negative story there.
Yeah, tether their mobile devices. Okay, to internet access. I see.
Yeah, people just finding alternatives. Basically, households are struggling. So, do you really need a landline?
I can't remember the last time I deliberately used mine. It sits there, gathering dust. Really.
Any incoming calls?
One or two. Actual human beings, maybe one.
From your mum.
That's it. Yeah. Exactly.
Yeah.
It's all on WhatsApp these days. No, we never use it.
That's it. It's good to talk. Is that BT?
Yes.
Right, we're going to head to the break. After the break, we'll see if we've got any upgrades, downgrades for you. We'll find out what the opening moves are. And yeah, we've got a Bitcoin purchase from Smarter Web. Only the smart people out buying crypto at the weekend. That's a lot of liquidations, isn't it?
It's a very lots of liquidations. Nasty.
And I must admit, I sometimes run my crypto over the weekend, so it was pure luck that I didn't, because I have had Ethereum and Bitcoin in the last couple of weeks, and you know, pure luck. So,
where's the Trump coin now?
Delisted. Oh, that's one thing. The meme ETF. Do you remember the meme ETF from 2021?
Yes.
So this thing, of course, had you know, AMC in it. It had GameStop, all the others. It was delisted because it obviously, you know, lost all its interest. It's just been relisted.
Yes. Talk about timing. Yes, that one I'm going to give you because
they're everywhere. You've got more red flags than a turkey football match.
What was that stock last year that Bank of America upgraded just before it? What was that?
Yeah, it was quite a few of them, probably.
Oh.
We'll remember that in the break. We'll see you in 2 minutes for the market open with our London Stock Exchange bell. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Right, welcome back, everybody, you knuckleheads, as our good friend Mr. Batista would say. What are we looking at for the open then? Any interesting moves?
We had Lloyd's, of course, this morning, fessing up to the fact that was it another billion in motor loss provisions. So that was the key update this morning from the FTSE 100, I think.
That's going to get hit then, isn't it?
So expecting that one to be weaker on the open. As I was saying in the chat as well, Costain, which is one we covered in Fast Markets last week, I think it was, has secured a 1 billion contract with Sellafield. So watching that one, that's fairly chunky.
800 million sterling, Lloyd's. I love you're just rounding up.
Oh, billion here, billion there.
Right, Persimmon and Barrett have, there's the launch of the Help to Buy scheme, where you need a 5% deposit, 15% equity loan up to 100,000.
Help to Buy? I thought it was 2010.
Yeah.
It's a new Help to Buy scheme.
Yeah, new one. Legal in General have named a new chairman, and what else? Aviva RBC outperform with a price target of £8 on Aviva. Seems decent.
You had Fresnillo raised to hold HSBC with a price target of 2,000 pence, if you want to go that way. 2,000 pence, £20. And M&G raised to buy at Berenberg with a price target of 342 pence.
Right, what have I got on then? So obviously, huge weekend opportunities. As I say, free money in the IG weekend markets. They were offering you, even after the Trump tweet yesterday, they were offering that you could buy the NASDAQ up 20 basis points from where it closed on Friday. So I've got a whole lump of Wall Street futures. I'm long those. I'm long the NASDAQ in probably the biggest amount I've ever been long NASDAQ. And we've also, I did do a short gold though. I got hurt on that. I've already been stopped out on short gold. I picked up some more Nike on the sell, now down at $66 Nike, $66 from $76 2 weeks ago. I'm still short my quantum. That scares me a little bit. Rigetti. And then long the home builders, long the regional banking, and then short S&P. Short a lot of S&P calls, but I did pick up some futures as well at 6557 in the weekend markets. Right, we're off and running then. Let's see who still is suffering the volatility and who's going to benefit. FTSE futures small up. So let's go to the winners first. Chris Beecham, take us through.
On the way up, we have Flutter Entertainment up just over 1%. BP boosted by the recovery in the oil price slightly this morning. I think they're slightly. As you say, Persimmon also up 1%. What have we got that's moving? Prudential, 0.5% moving higher. Bit of a recovery across the board. Nothing dramatic, unfortunately, for the people writing market updates this morning, hoping for a tumultuous open. You don't get it. Always the way, isn't it? They come in, journalists, they wait for them. It's going to be exciting next morning. It never is. And you get a sea of absolutely nothing. So often the way.
Boise's having a moan up about the bell. Boise, we thought we'd keep this for Wall Street, and then we have this. But it is Columbus Day today, so I went for the London Stock Exchange one. Is that all right, Mr. Boyce? We'll go for this normally.
Of course, yes. Which the US markets aren't closed.
Are not closed, correct.
No,
the bond market is closed.
Bond market is, which is a weird one, and a lot of the data gets shoved to later in the week, doesn't it?
What data? We don't get data.
Oh, sorry, yes. No, the EIA is supposed to be releasing, so we shouldn't get any claims, should we? We were supposed to get CPI this week.
I think that's old McDonald's you're talking about there, isn't it? EIA. Trainline up 4.5%. Trainline steaming along strong there. Fresnillo the same. Great move in Fresnillo there.
Yes.
Rank up 4, Ferexpo up 2.5, and then the miners. Yeah, good recovery in the miners there. £29 for Anglo American. Ah, dear. What could have been?
I've still got Anglo American.
Well done, you. Now that's getting back to where, when BHP bid £31 for them, in fact, it is back there because you've had £2 come out of it.
Yeah.
Because you've had the platinum business come out, which was £2. So you were better to hold on as Anglo American shareholder than accept the BP offer. And that did not look right for a long time.
Absolute storm of performance recently.
Yeah.
Yeah, I bought it sometime in 2016.
All right.
Went for about £8 a share.
£8?
Yeah.
2016?
Yeah.
That was £8.
I'm looking at the price chart right now.
After the commodity.
Yeah, after the absolute rout. Yeah.
Yeah. Okay. Yeah, that's when Glencore was down to 90 pence. 90 pence.
You could have bought it for. There you go. I bought it.
And Ivan Glassenberg did.
Somewhere around here. Yeah.
Yeah.
Pleased with that.
There's certain huge telltale things in markets when to buy stocks. And Ivan Glassenberg and 3 other board members of Glencore all buying stock at £1.25 was a fairly decent signal.
Sign. Yeah, exactly.
But it still went lower. It went down to 90 pence after they did that. Right. Yeah, we will have a look at see if there's any
losers.
Losers, not really. Maybe the defensives. BT Group, there we go. We had the story on BT Group. That's down 0.5%. But maybe more interest in Europe. What is happening in Europe? Well, ASML recovering, €834, up 2.5%. So that Stellantis dog, it's killing me. Although it's killing me a lot less now than it was at €9.40 on Friday. Puma, I sold my Puma. That was what I did. Very lucky on the timing there. Sold those at 22.80 on Friday. Do I buy them back now? Well, no, because they've got numbers soon. And I wasn't buying it for the numbers. I was buying them to get bid for. So I'll wait till after those numbers come out. Then Kerching is 312. Hermes. The autos, nice to see the autos having a bounce.
Maybe even the worst stock got from time to time, but not for long.
And any losers in Europe? Well, I think, I need to take that Peugeot off actually, because of course it's just part of Stellantis now, isn't it? And yeah, Philips small down, InBev small down. What about, Ferrari not open yet? I wonder what's going on there. That must have fallen more, did it? FX, what about foreign exchange, Chris Beecham?
Slightly poorer morning for the pound. The dollar on the up against the yen. The impact of last week continues to resonate, I suppose. Both the election and the drama. Euro slightly stronger against the pound. But where's euro dollar on that? Am I going blind?
Go on, please continue.
It's not
Find
there.
euro dollar.
Where's it gone?
It's not there. And Luke Moore has had a week to now get it back on there.
How odd.
And where's gold on our major commodities list?
Oh, these are strange lists. But they're on my lists.
You're on spread bet though.
Oh, okay.
This is a CFD. Right, we're seeing oil. Well, I don't have WTI either, so I can't see that.
What are we seeing with oil? What are we seeing?
Right, copper price. Oh, copper take a real beating though. Do you know what? If I'd seen that on Friday, if I hadn't been busy socializing, I would have been buying copper on Friday. That's annoying. Couldn't have bought that one over the weekend. But 503, considering it was up at 520.
Yeah. I could have got down at 488. So
could have got it 488.
Well, when that was the low on Friday.
Do you know what? I'd rather have bought that than crypto. Although Ethereum at $36 was interesting. Okay, so yeah, silver is just non-stop, absolutely incredible. 5,170. Huge call by Gio on our chat there. He's absolutely nailed that. And let's have a quick check on the indices.
So we have FTSE slightly up this morning. Germany, not too bad performance, 0.4% higher. And then US futures looking very, very strong there. Tech 100, unsurprising. The Hang Seng clawing its way back as well. It's down about 3.5% this morning. Still now 2% down. Down about 6% on Friday.
Good. Right, some of the small ones that I know you lot are interested in. I see Andrew McKelvey hitting us up with SWC. SWC, of course, trading at 82 pence, was it? 83 pence. Last week, it is now 90 to 5. So if you were the smart one who bought Smarter Web down at 82 or 83, you've already made 10% on that. So always worth keeping an eye out on the and having your price alerts in there. What else do we have? Defense Holdings this morning. What is Defense Holdings doing? They are down 6% at 3.17. Defense Holdings 3.17. Then we've got Pensana. Pensana up 2%. Of course, Pensana rare earths right at the heart of the arguments.
Yes, it's true.
Maybe
yeah. Sorry, the idea obviously that the US and others will catch up with rare earths, but obviously that takes time to open mines and all this kind of stuff. So
yeah.
In the meantime, you still had to make nice with China, really.
Or do an offtake agreement with Pensana Rare Earths.
Yeah, there you go.
And get your Angola earth shipped across to Washington. So I think what else do we have to look at? Tell me what small caps have we not covered so far? Drop that into the chat if you like. But let's go back to the FTSE and just see how it's Vodafone 84.70. 84.70 in Vodafone. That's disgraceful.
Just not on, is it?
You didn't even try to cover your yawn there.
No, I get that with Vodafone. It's sort of a Pavlovian reaction, really.
So Vodafone is the loser. They 84.70. Ugh. Yeah, not sure what to do. I am out, but I'm not sure how long I'll manage to stay out for. On the winners, yes, it's Fresnillo. Just carries on up and away. Where did we see Fresnillo? Oh my goodness me! So this started the year at £6, and now it's £25.
Yes, I think it's still the best performing FTSE 100 stock. When was the last time you saw quadruple or more. Is it quadrupled? Yeah.
Yeah, in 10 months.
In 10 months.
Did Rolls-Royce manage that? No, I don't think it would have been that quick, would it?
No. But that's a silver miner for you. It's easy to look at that and think, oh, I should have bought that. But it'd been a very poor performer for a long time before that. Not a great one. So
haven't owned it once. Right, we're going to go to a quick break, and then we'll be back with some fast markets, myself and Chris Beecham, because we hear Peter Ambro is entering the building with his security men because he's got something with him that is shiny and wonderful. We'll see you in 2 minutes. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Kettles on the brew, Rich and Angel laughing, banter's nothing new. Charts are moving sideways, traders on the go, but there's one chair empty, you know who we know. He's the man with the plan, runs the buttons in the show, but he's limping off early, he's got a poorly toe. When Phil's away, the charts still play, but it's not quite the same old way. He's home with a cover wrapped up head to toe. Poor producer Phil and his poorly toe. Cameras keep on rolling, Axel's got a trade. Piers is talking tech again, another upgrade made. Rich is cracking jokes while Ange runs the flow. But who's gonna cue the music? Phil's not on the go. He's the wizard of the wires, keeps the live stream glow. Now he's resting that legend, the myth, the toe. When Phil's away, the charts still play, but it's not quite the same old way. He's home with a blanket, taking it slow. Poor producer Phil and his poorly toe. Guess the chart? We tried. Roll the clip. We lied. Where's Phil gone? He's out the door. Toe too sore to press record. When Phil's away, the crew still stay. Trading, leave another day. We'll keep it running just so you know it's all for you, mate. And your poorly toe. Oh, 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 oh. Toe, toe, toe. Poorly toe. Toe, toe. Come on, Phil, let's go. Toe, toe. We'll trade the show till Phil's back in control.
Oh, that was very funny. I enjoyed that song very, very much. So Dr. Watson in the gallery responsible for the lyrics there, and he hadn't run it past Phil, which is just even better. Superb. Well done, James. Well, what's the stock? Did you get it?
I didn't.
191. Did anybody get it? Johnson & Johnson, Gavin Ackers was saying. I don't think it was. It was. Aha! Oh. Boom. The boombastic. Well done, Gavin Ackers. Superb work. Well done, well done, well done. And right, we're going on to, let me see here. We're we're going to take a look at Chris's week ahead, because of course it is the start of earnings season properly. Forget the ones that were last week; they were rubbish. Now we're on to the important stuff. Now this line here is your Tuesday, so that's Tuesday, that's Wednesday, and that's Thursday, and Friday we're all taking off. So take us through, Chris.
Earnings season begins. So we had the banks, and then as usual, JP Morgan, Wells Fargo, Citi, Goldman Sachs all on the Tuesday, and then Bank of America, Morgan Stanley following swiftly on the Wednesday. It then slightly cools, of course. CSX, so interesting one, railroad stock, very strong performer, good one to watch. And then we've got a lot of UK ones as well, because we've had no RNSs for weeks, really, very few. And then suddenly, here they are. There's just loads of them, especially on Tuesday. So Domino's Pizza in the UK, Oxford Instruments, well, they reported this morning, I think I saw them, might have got that moved. Bytes Technology, Entain, Page, Jupiter, Rathbones on the Wednesday, Travis Perkins, Whitbread on the Thursday.
Of course, Travis will be interesting because Kingfisher's numbers were so good that Travis spiked up 5% as well.
Yeah, so we'll see where they can meet up ahead of rotations. And Pearson as well on the Friday. Bit of a struggle of Pearson, but
yeah. So that's interesting. What about the economics front? What are we allowed to see? Who's at work?
Who's working? Well, German ZEW on Tuesday. So UK unemployment rate tomorrow morning, 7 a.m. So expecting the rate to hold at 4.7%. Slight slowdown in wage growth, which will please Andrew Bailey in the Bank of England, I'm sure. German ZEW index at 10 o'clock. And then, of course, Wednesday, it should be inflation day. We definitely get China CPI. We should get US inflation. I think I checked this last week and said it was still likely to happen, despite the government shutdown, which continues to go on. Is now, what's the longest? It's
35 days.
35 days. We're not there yet, are we?
And then retail sales on.
We do get retail sales. We think we get retail sales. We don't. We probably don't get initial claims.
It'll be nice to get some data, won't it?
Yeah.
Right. What did Tom Cruise and Andrew Bailey have in common?
Oh, I don't know. What do Tom Cruise and Andrew Bailey have in common? Both Scientologists?
No, they both go to the IMF. So Andrew Bailey and Rachel Reeves at the IMF this week. And that is, of course, going to be an interesting meeting because the last one was in April, just after the big bomb that old bomber Trump dropped on us all.
Tariff, yeah.
So everybody was warning him, look, this is going to destroy international trade. It's going to be bad for everybody. It hasn't been so far, safe to say. They've got to admit that. So, Scott Bessent gave them a few warnings last time. What do you think the mood's going to be this time?
Very cautious this time round, isn't it, really? It's as Friday proves, everything still lives and dies by what happens in Washington.
Yeah.
So it could be a bit of a tense meeting, really.
Good. And then, of course, we've got some ex-dividends as well. We'll just scroll down to them on Thursday because we saw you guys get caught out on Thursday last week, not knowing who was in the FTSE and what dividends were going to come out. So let's just go ahead there. We've got Diageo, Persimmon, Games Workshop, and Smiths, and then ITV in the 250. Is it?
According to my source.
Yeah. Wow, that's poor, isn't it? And then Hayes. Are you watching the Celebrity Traders?
No.
Yeah, I think. Do you know what? I think you might actually enjoy it.
No, because it was one of those things where the hype and there's so much talk about it that I just couldn't be bothered. I thought I'm not falling for this. So I saw the very beginning of last week's episode with my parents, and that was it. But no, are you watching it?
I watched a couple of them on Saturday because I was a little bit hungover on Saturday. So So I watched a couple of episodes, and then was saved by Strictly Come Dancing.
Saved.
Wild Saturday
Another
nights.
program that I avoid like the plague.
Right, so yeah, ITV, interesting there, ex-dividend as well. I was trying to see how much they go ex-dividend. But why is this not giving me all dividends, upcoming UT payment? I want ex-dividend dates. There we go. Right, so we've got there ITV is 2.2%, Diageo 2.6% when it's at 18 quid. So that's going to put it down towards £17.60. Or is it more? Is it? Where's Diageo this morning? That's the kind of thing that I take a little bit of interest in, because have we seen
trading at £18.03?
So, wow, yeah, this thing's been absolutely terrible. But have we seen it as low as £17.50? Because that's where we're going to see it on.
Not since, no, because Friday was the low, about 17, just below, yeah,
yeah.
August 2015 lows next, around £16.90.
The problem is it's tempting, but it's been tempting all the way down from £21, which is.
It was Bank of America last week. Was it Bank of America last week saying they should flog off brands in order to release money for a buyback, and also just to pay some debt down?
Put this on the weekly. There we go. So back to 2015, when you got your cheap Anglos. You could have got some cheap Diageo and made absolutely nothing. And instead you've made 400%.
You know, exactly. There's the joy of markets for you.
Good. Right. It is time, talking about mining stocks that do very well. Peter Hambro is in the building. A big interview coming up with Angeline. That will be with you in, I'd say, 3 minutes. Give us 3 minutes and go make your cup of tea, go make your coffees, and then settle in to really the godfather of gold, I would say.
Yes, the man himself, really.
We'll see. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris C.J. Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, trader friends, we are in for a special treat. We have Peter Hambro, chairman of the Peter Hambro Family Office. This time round, we've managed to get him in with us. It's amazing. Thank you so much for coming on this day. Last time you were trying to come in, we both got stuck with the tube strike.
A nightmare.
It was a horrible time.
But I made it today on the Elizabeth line. Very exciting.
And not only did he make it, he also brought something spectacular for us, right? Let's see it. Let's see it. Everyone's waiting.
Well, I thought that you should really understand what a gold bar is. This is a 10-tolar bar melted by Credit Suisse. It's 3 3/4 ounces of gold. Current market price somewhere around £11,000, $15,000.
Wow, right? What I'm in
wanna hold it?
I'd love to hold it. Oh, it's amazing. And the thing about gold, this coming from a goldsmith's granddaughter, is it's warm to the touch, isn't it?
Highly conductive.
Here we are. I might have to run off with this after this. It is real. I would bite it, but I'm not sure, you know, Peter would like this hygienic, I'm sure. But it says a couple of things here, and what I'm also curious about is, am I not right in saying every single one comes with a serial number?
No, that's not. The number on there is the fineness of the gold. It's 99.99% pure gold.
How about the trackability, though? Because no trackability. I've read in various places that there are, you know, certain houses where they have a serial number at the bottom or on the side.
The large bars do. The 12.5 kilo bars do. Those bars are the favourite bars for smuggling gold out of the Middle East into India. Wow. And in the old days, you'd see guys going to India with a big waistcoat and a coat over the top, and they had terrible trouble walking because they had those bars in little pockets in the waistcoats, and they said if they fell over,
they were listing.
They
were listing.
So that was a very. That is really just a means of payment in India. That's a
wow. Incredible. So we
I brought you something else too.
Yes, I'm
just to give you some idea of what I think is important about the gold. Do you have that? Did you manage to put the photograph up?
Yes, I'm going to put it up right now as we speak. And also, I noticed there's something else.
Let's look at that, because the photograph first is more important.
Right, so I'm going to get this photo up for everyone. If you give me a second. Here we are. I'm going to put it up on the left-hand side. Right, here we are.
I was deputy managing director of McAdam and Goldsmith, which was then the largest gold trading company in London. But before that, in the 1960s, my cousin Jocelyn Hambro, who was chairman of Ambrose Bank, invited the Queen and Prince Philip to lunch.
Oh,
and
as you do.
Worrying about what he was going to talk about and what would interest them, because banks are pretty boring for Queens, he decided that he would have pile up £1 million. And that is what £1 million looked like in the 1960s.
Wow.
Which is simply amazing, because £1 million now looks like
yes.
60 of those.
Yeah. You get a very tiny pile. Yes, and you know, that's a fantastic way of explaining
the purchasing power.
Price.
The purchasing power of gold is vital. This coin, which was minted in what is now Belgium, roughly in the year that Christ was born,
wow.
2,025 years ago, buys the same amount of gold now as it did then. So if you want to live a long time and have something that really holds its value, that's it. It's a Roman gold coin. So I thought that they would be interesting things for your investors.
Certainly, and many of the investors watching the show have been asking, you know, for you to come back, because when we were last on, you were very prescient. You said gold was going to head higher very soon, and it has indeed. I mean, it cut through that 4,000, no problem.
But look at silver. I told you the silver, which has done even better. That's through 50.
So the question everyone's been asking, I've been sent through these questions yesterday and the day before, especially on Friday too, when you saw the market wobble.
Yeah.
If you were looking at momentum, which would be the precious metal of choice? Is it silver? Is it platinum? Is it palladium? You know, where do you think the action is?
Well, there are all sorts of technical stories around at the moment that there is possibly a large shortage of silver, and the exchange is having trouble. That people are buying gold on the exchanges and then asking for delivery, which is causing a lot of problem, and that's really what's, I think, driving the price higher at the moment. And gold, to some extent, is in line with that. It hasn't performed quite as well as silver, but it's certainly looking good at the moment. And there doesn't seem to be anything really that is going to stop it. There's so much uncertainty that I certainly wouldn't dare go short of it.
What would you say to people who, you know, have been in gold for some time now, and you know, their cost base is low because they got in early, but they're a bit concerned that it's now looking toppy?
Well, you never make a loss by taking a profit, and you want to be sure that gold is wealth insurance. If the gold, and you decide what percentage of your net worth you want in gold. If, because the price goes up dramatically in gold and the other one doesn't, maybe just take some off the top. But right this moment, I'm not sure I'd advise people to sell.
You've been a perma bull for as long as I've known you, Peter, and you know, rightly so. I mean, look at the price of gold; it's incredible. Lots of people here asking as well about, you know, if they've taken some of gold and they put it into miners, for example. We have a question from Andrew McKilvey, who has positions in Serabi Gold and Greatland. He's got a question for you. What do you think of and if you can talk to this, if not, you know, just the gold price, but what do you think of the political risk of Brazil? He's thinking about Serabi Gold.
It's one of the many risks of the mining industry. I started a business in Russia, which we built into a couple of $1 billion, and the Russians stole it. And there's nothing you can do. You can buy insurance, but it's incredibly expensive. I think the important thing is to be sure that the management of your gold company is good. That's the most important thing. Second is that the gold is there and easy to get out. And third, that the government there isn't going to steal it from you. Don't forget that the United States banned private ownership of gold at one stage, and that brought into life the South African coin, which everybody was so keen about, the Kruger Rand, because it was.
Many city boys buy Kruger Rands when a date doesn't work out. It used to be the it used to be the thing. Did it not work out? And I got another Kruger Rand. Rich has one too, given to him on his 21st birthday.
Yes, nice. I bought my first gold, which was a Kruger Rand, in about 1971, and I paid $36 for it.
Wow, incredible. Where do you? This is going to be a question that I've long wanted to ask you. You know, where do you store your gold? We've got Simon Popple, who's come in and said, you know, just effectively pay the company. Some people want to buy their own vault. I mean, what?
Do you think I'm going to answer that question?
What's your mother's maiden name? Everyone in the chat. Okay. We've got Monkey Man. Good morning to you, saying, I'm just like kid in a candy store. I am indeed. Anything that glistens. Also, another a client of ours said, Peter, you need to take a taxi home. Every scally in London will be on the Elizabeth line. Yes, I was truly concerned. You can ask everyone in the gallery and also on the chat, because our clients go into Discord after the show and they help each other trade and invest. And I was actually going, I'm really worried about Peter. Quite worried. He's a big boy. Captain Kukumba. Kukumba, welcome. Good morning to you. Is shorting silver more advantageous than gold? I'm not sure you're keen on shorting silver now as well. I mean, it is very volatile.
Playing the gold-silver ratio is a very good way of investing. Gold is lacking against silver at the moment. Silver is saying gold should be over 5,000. But that spread has been moving the wrong way, and I haven't considered doing it myself. So I'm not. It's speculating in the short term is great fun. Can be very expensive if you get it wrong.
And very stressful. Silver's very volatile.
We shouldn't forget that the old saying that he who sells what isn't his and pays the price or goes to prison. And so going short is very, very dangerous in a market like this.
Speaking of which, Kukumba, one of the things that I look at most days now is I look at implied vol versus realized vol. So I march over to the trading desk over there, and I am probably the best return on investment on the Bloomberg terminal, as I'm ex-Bloomberg, so I literally like hog it. So implied volatility for silver at the moment is very far apart from actual realized volatility. And now that could tell two things. One is that there are many coming into the market. So there's a lot of interest, open interest happening there. What you don't want is for the two lines to meet. At the moment, it's still quite a wide gap when I checked on Friday. Message me, Kukumba, and I can try and check for you as well after this show. We have another question from Andrew McKilvey. This is a really good one. Which metrics are the ones that you look at for miners? for example, AISC resource estimates?
To be honest with you, the most important thing is the management.
That's what John Mayer says as well. Management is
it's really critical. It's obviously if you can find somebody with high grades, gold that is easy to dig out, but more importantly isn't refractory. Refractory gold is gold that is locked up in the quartz, and it's really difficult to get out. It's possible, but we built a $2 billion plant to do that in Russia. Worked very well, but people tend to buy into gold deposits that are refractory, and then they don't get the throughput. You got the gold in the rock. You can see it, but you can't actually get it. It's locked in there. So be careful about refractory gold.
What's number 2 then? If management for you and John Mayer is number 1, what is number 2?
Well, I think grade is hugely important. Tons and grade. I used to say the most important thing was tons and grade, but now I'm absolutely certain it's management. Having got into trouble a couple of times with that. Yes. I think the opportunity is perhaps more exciting at the moment. You can buy gold in the ground, effectively, at incredibly cheap prices, $100 or $200 an ounce. And okay, it's going to cost you maybe $1,500 an ounce to get it out, but the margin is terrific. And so I would look at the margin, the historic costs, fully expense cost, is probably the third most important thing.
Brilliant. We've got Shrimp Fred and Friar Tuck coming online now. Shrimp Fred and I think Friar Tuck talking about the same thing here about trend. What price in terms of gold would you consider toppy?
The world has changed so much.
It has. We were talking about this earlier on.
You really can't be sure. And I'm not recommending people should buy gold as a speculative thing. It's there. In my view, 10% of your net worth in gold is very cheap insurance, and then you don't worry about the price, because that's when things go wrong. And they do. Having gold and having physical gold. People have forgotten. I mean, I was born before the end of the Second World War, and I can remember huge places in London which were bomb sites. They became car parks, and people made a lot of money out of them. And look at what's happened throughout the Middle East. You see those photographs, boy, if you were there and you had some gold, life would be a lot easier. That's the ultimate. And it doesn't feel at the moment it's that far away. That's what scares me. I mean, and it's because I can remember the effect of that. Two of my uncles were killed, and what it did to the family. But so there's that bit inside me that says I want stability, and that's where I'm. That's
right. And I think we lull ourselves into the false sense of security that we are utterly safe. And there is some other interesting anecdote as well, that we're only 6 meals away from complete disaster. We get to a point where there's war, outbreak, whether here or elsewhere, and we have, 6 meals disrupted. It could be complete anarchy very quickly. Speaking of that, we have Marcus King also joining the chat, talking about keeping physical gold until my house was raided living in London. Dearie me, why raided? Also, Rich chiming in. This is my co-host. Mining industry has had loads of big characters. It's just biggest sat right here with me. I'm hoping to see you this year at resourcing tomorrow. Are you going to be there?
It
used to be Mines and Money, but they've changed their name now.
It starts tomorrow, I think, isn't it, or the day after?
I think they've moved it back to a couple of weeks' time.
Right, I keep getting letters from people who say, "Are you going to be there?" So yes, I will be there. Gosh, lots and lots of funny stories, but most of them are unprintable.
Yeah, that's another show, people. I'm just showing this up because I ran this for our wonderful clients last week because they were asking me about price momentum, and I haven't yet updated it, but it is from last week, so quite recent. And I was talking about the momentum seen in gold, silver, and platinum, and we are definitely seeing the momentum head towards platinum and also palladium now. Looking at the 1 month performance there. And the 3-month performance there, and you can see that best 3-month performer was silver, but year-to-date leader was platinum, and which is dominating still. But palladium also looking like it's making gains now. Out of these four, which do you think perhaps? We have many clients with different time frames and durations in their trades and investments. But if someone was looking to get to year end with one of these four, which would give the best price momentum?
Well, the platinum group metals are much more industrial because of their use as catalysts, and that has a big effect on it because of the industry. Silver has lost its industry level because there's no photographs being taken anymore. Platinum used to be, gold was the second. If you wanted something really good, you had the platinum this and the platinum that, and it's gone way down compared to gold, and has some catch up there, but it's not as fungible and it's rarer and it doesn't do what gold does in terms of showing off. Platinum makes dull jewelry. It's sort of shiny, but whereas this is warm and lovely, and so I think that's possibly why it's lost sparkle. But it probably should come up. There's an argument for be short gold, long platinum, I think. Yeah.
So let's say, one of the highlights. You've had such an amazing, career. One of the highlights of, your life, Peter. When we've caught up at Mines and Money, we just never have time. It's like ships passing in the night. But now that you're on my show, what is if you had to choose one key moment?
Of the good things that happened or the bad?
Well, okay, pick one of each.
Well, the key moment was when we got raided by the Russians and they stole the business. That was a nightmare. First gold pour at Pokrovka and was amazing. We started that thing with virtually no money, and we were separating gold from the rock by very simple methods. So it was very exciting when we finally got and became as you can imagine, the freezing cold of Far East Russia. You needed a lot of vodka to get warm.
Thankfully, they make good vodka. Another question from the floor: when might you become concerned about the lack of further upside in the gold price in the short term? Or will you, I know you've said time and time again that you would not, because it's a long-term insurance, but are there any scenarios, Peter, I guess is what the client is asking, any scenarios that would make you think, okay, time, change of heart?
Absolutely, and Mr. Putin withdraws from Ukraine, Israel becomes a holiday camp. All the people in Sudan are able to eat. Yeah, well, that would definitely have a negative effect on the gold price. But think what it would do to your ordinary shares and another thing, but the world would be magnificent. So that would be the biggest worry. Unlikely one.
Says with a smile. And the other thing that our clients like doing a lot, and it's almost a fine split down the middle between long-term and shorter term. So the shorter-term investors and traders, they look to the gold and silver price to, you know, naturally take profit off at certain points. You know, is there a seasonal factor that you've seen in your long-standing career as to, you know, the best time to potentially front load, the best time if you wanted to ease off? Is there a seasonal sine curve?
One of the great heroes in the gold business is a man called Julian Baring, who was a very, very great friend of mine and ran the BlackRock gold operations. And he used to talk about the Christmas box. And on the whole, sort of November to mid-December was a very good time for gold. And he sadly died very young, but his son Justin is running a fund as well. And we always talk to each other about the Christmas box. And this particular Christmas box started as a Christmas box just before Christmas. And every so on we see kick through another 1,000.
What?
It's quite some Christmas box. Yes, I mean, from a seasonal point of view, you get the wedding season in India.
Yes.
Is important, and Christmas too. People are buying physical gold because it's a nice thing to give away as a present.
Mm.
I don't think we've really focused though on what the central banks are doing, and that's where the big pressure is coming from. The huge buying by central banks everywhere.
China's central banks.
And that was when I was in the trading business at Makata, that was my sort of main area. So I kept in touch a little bit with that. And China, interestingly, is the biggest producer of gold and the biggest importer, which is pretty amazing. And I think, as I may have said when we last met, it was something that the Chinese government did was to encourage the middle classes to buy gold physically so that they would be protected. There would be a safe, strong middle class if things went wrong. And that's very much what's happened. And I think it's why there is a level of stability in China that otherwise might not have been there.
I'm about to fly to Asia in about 6 days' time. And I'm going to be meeting with some central banks out there as well. There's also a sense that it's not just China that's trying to encourage the middle classes to buy gold. It seems like it's Southeast Asia as well.
Yeah. Well, it was a good idea of China, and people have seen that it worked. So why not copy it? You know, why not do it too? It's the same insurance business. If people have got that nice little something hidden away, if anything went wrong, I could always flog that, and you know.
Of course, with the Chinese, you never really flog it; just give it to the next generation.
Indians too.
Yeah. Chinese New Year, is that still a big part of the seasonal trend of gold? It used to be said that Chinese New Year there was a lot of gifting of gold.
A lot of gifting. Yeah, it is. It's not quite the same. It doesn't seem to. I mean, I can't remember it as being particularly because there's so much holiday. People are doing other things rather than investing, which there isn't. Actually, it's a slight damping effect because the level of interest has gone down and everybody's drinking Mai Tai.
Or eating. There's a lot of eating going on over there. A question from the floor. of course, been in the industry for such a long time. Are there any particularly funny moments you remember fondly? Funny characters from the mining industry? Take it the Bristow's just. I couldn't believe it when I saw it, because he's always been
Mark's
person that you always see there first.
Mark and I go back a long way, long before when he was round gold, and we fell out.
Everyone fell out with him.
Fell out then before he was, but he's been a friend, and there have been some super guys. I worked for a guy called Henry Jarecki, who was a Jewish refugee, ended up in America, became a psychiatrist, was assistant professor of high psychiatry at Yale, and picked up a book called Gold, How to Buy and Where to Buy Gold, or something like that, and discovered about the London gold market. And he had a brilliant idea, because the American currency was convertible into silver. Mm. And you had silver dollar bills, and you could take them to the Fed, and you got coins back. Mm. And the silver price went higher than the round dollar was worth more than the paper dollar. So he paid students to collect paper dollars, paying them people a premium for them, and they were bundled up, huge quantities, stacks of them, sent to the Fed, and the Fed produced big bars, and he actually made enough money doing that to buy McAlter and Goldsmith from Ambrose, which was originally was owned by our family, which is why. And he's still around. He's 90 and a bit, and still a very important player in that market. And he was. You might possibly remember the silver problems with the what were they called? The guys from Texas. Mm. And they tried to corner the silver market in New York, and that was the busting of that was. Henry was heavily involved in that. Wow. Breaking the. Anyway.
Incredible. We're just going to sneak one quick one in for Arsax, because she has positions in both. Peter Arsax, one of our clients, she's asking, do you think it's still a good time to buy right now for the longer term for gold, or should one wait for a pullback?
There are times when you think, I think it's going to pull back, and if you think it's going to pull back, that definitely do that. But just when it first broke through 4,000, I thought, well, it'll come back a little bit, and it has. I mean, I've got the notes that I wrote to people who do ask these questions, and I said I think it'll come back, and that's a good buying opportunity.
There you go. Thank you so much for coming in, and feel free to leave these here with me. I've got Axel Rudolph coming up next with Technically Speaking. You can ask him about technical analysis surrounding gold and silver as well. But for now, Peter's a very busy man. Thank you so much for your time.
Pleasure.
And we look forward to welcoming you back again. Bring ever bigger. Gold. And do stay with us. Any questions?
Hunt was the guy. I'll just see the. Yeah.
There we are. Any questions, do send them to me, ask@ig.com. I'll get it in front of Peter. Also, slam the like and subscribe button, because that gives us and producer Phil and Rich and myself more ammo to bring amazing people like Peter on.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG. Hello and welcome to Trade of the Week on Monday the 13th of October 2025, and let's look at this week's trade, which is to go short US natural gas, but only on a bounce. So why do I want to go short? But basically my signal to go short happened on Wednesday of last week. You can see this bearish engulfing pattern here, confirmed then on Thursday. And right now we're trading below that area. So I want to wait for a bounce. Maybe we won't be able to get in, but I'm happy to miss this one if it doesn't happen, because I want to have a reward to risk ratio of 2-to-1. So a reward twice as big as my risk. So why do I want to go short? Well, basically, if you look here, you can see that since March of this year, we've been in a downtrend, and we've had these ABC corrections to the upside in Elliott wave terms, and then we continue the downtrend. And this is something similar happening here. You can see wave A, B, C up, and then the trend should continue. So for that reason, I believe that we are going to head back down again. Now, obviously, the fundamental reasons are that there's a lot of ample supply there, and also milder weather on the way in the US, hence the decline in the price of natural gas. So the trade of the week would be to go short at US natural gas at 3,570 on this daily financial bet, with a stop loss above the highest point last week at 3,823, and a downside target around probably the I don't know, 3,070 area, so just above these lows here. So that would be one idea on this setup. I'll summarize it in a minute again. But before I do, I'd like to mention last week's trade of the week, which I got completely wrong. I thought the political situation in Japan would basically not lead to a shift in people's attitudes, but I got it wrong. As you can see here, we went right through my resistance area, didn't care about any of these higher levels, and went through them. That's why we only risk 2% per trade, because even when we get 3 in a row wrong, which is what has happened so far this month, I've been wrong 3 times in a row. Don't forget, at the beginning of the year, I've been wrong 4 times in a row, and some people basically gave up. But that's why you risk 2% of capital per trade, to keep it small, because then once this bad spell is over, you tend to then make profits again on other trades and make that loss back. And I think at the moment we're still up around 25% year to date, risking just 2% of capital. Just remember, it's all about risk and reward. So anyway, dollar yen was wrong. And coming back to this week's trade of the week, it is to go short US natural gas futures on a bounce on the daily financial bed at IG at 3,570 with a stop loss above the high seen last week and a downside target around the lows seen probably in mid and towards the end of September, around 3,070. Hello and welcome to Technically Speaking, where you can send in your questions to do with technical analysis or what you want me to look at with regards to my view on where the assets that you're looking at might go to. Now, obviously, I'm not giving any trading advice. All I'm doing is interpreting the price data that you're looking at as well, and from a technical perspective, trying to interpret what we are seeing on there. And we've got one question to do with Barrick Mining, and let's see what we can see on this 24-hour chart. And that is a very bullish chart. As you can see here, we've had a nice up move from August of this year. But since then, basically, I can't see this on my screen here, since the end of September, 22nd of September, we've been range trading. Now, that in itself is not a problem. People take profits in an uptrend. And usually, it is followed by a continuation of the previous trend. And look, this is exactly what happened between June and August of this year. We traded sideways and then the trend continued and we had a very nice upsurge. Now, what's interesting here is the volatility has increased. We saw this huge move here on the 19th and then on the 20th of September. And then we are just working some of this positivity off at the moment. So for me, that is still an upward trend. It could be an ascending triangle. Let me just draw it on here. Let me just put this on here like this. So you've got descending highs and you've got more or less flat lows, and that is an ascending triangle. And if we were to break out this upper trend line, this resistance here of the triangle, currently around 3,482, then that would be a valid breakout of this pattern. And what you would then do is take the distance from the highest point of this breakout down to the trend line or the support line of the triangle and project that distance here from there to there higher towards the upside. So in that case, we would be talking about 3,800, 3,900 as the next upside target. What we also need to do, though, is look at previous highs and lows, because quite often those might act as resistance. If you look at Barrick Mining on the monthly chart, you can see here there isn't really that much. There's resistance at the moment, which we went through. These were the lows from 2010, February 2010. But basically the next upside target are these lows here going back to June of 2011 and the highs September 2012. And they are around 4,300. So basically looking very bullish. As you can see here, we've seen, or we're currently on track for our 6th consecutive month of gains. Very strong upward movements in the last 2 months, taking us above the previous high seen in August 2020, all of which is bullish. So short term, yes, we're just consolidating against the trend, but for me, the trend is your friend and it's still bullish. So basically, if you want to play it tight, as long as we stay more or less on a closing basis above 3,200 on this daily financial bet, that chart is still bullish. If we were to stay from a medium-term perspective above the last relative low, which is this one here, the low from the 17th of September, which was made at 2,823. As long as we stay above there, that's still bullish to me with the medium-term view. So let's look at Santa Barbara now. I don't know much about this one, but it also looks positive to me, because what we can see on the daily chart, up move, consolidation and continuation of the up move, heading higher. Let's look at the longest time frame possible, because that's what we do when we don't know what happened in the past. And you can see here, again, positive. Why? Because we are in the process of having our third consecutive month of gains. And more importantly, last month in September, we closed above the previous high here seen in September of 2024. That confirms this bottoming formation here. And we should now be heading towards the high seen here of the 30th of April at 73.3 on the daily financial bet. That's an upside target, and then probably the 80 area. So Santa Barbara clearly looking, or St. Barbara clearly looking bullish on the price chart. From a short-term perspective, provided we stay above these lows here, probably the low seen on the 24th of September. For me, the trend is your friend, still looking bullish. From a longer-term perspective, yeah, I mean, basically, you could probably place a stop loss below the early September lows. But this trend, to me, looks very healthy and is more likely, in my opinion, to continue than for a reversal to the downside to happen here. And now I've got a question to do with Tesla. Let's look at the Tesla share price, again, a 24-hour IG spread bet. And Tesla doesn't look that healthy in the short term. Why? Well, basically, Tesla has done extremely well, as you know, over the last few weeks and months. We were close to retesting our record highs seen in December of last year. Didn't quite manage to do so, though, and have started to come off on a monthly basis. Now, you can see here we're holding around the high seen in November of 2021. So that is support on the monthly chart. But if we go down onto a weekly chart, what we can see here is this potential formation on the candlestick, which may indicate that we're sort of topping out in this area. That in itself doesn't mean that much, but last week's move down and closed below the previous 2 weeks' lows is not bullish. And if you look at the daily chart, what we're seeing here is potentially just an ABC correction, and the trend could then continue. And you can see similar ones here. For example, you can see it went down, up, down. So A, B, C, and then the trend continued. Here it was in a downtrend, A, B, C up, and then it continued its downtrend. But basically, either we have this scenario and the trend just continues, or we fall through Friday's low. If that were to happen, what we would see is a top formation, because you can see here, it's even perhaps a head and shoulders top, because that's the left shoulder, that's the head, the highest point, and this one here is the right shoulder. What we then have is a neckline between these lows here, and that's where we closed below on Friday. So technically speaking, it is possible that we're seeing a reversal signal at the moment. What does our relative strength index say? So if you look at the oscillator relative strength index, what we can see here is that the high we made on the 2nd of October wasn't confirmed by a higher reading of the relative strength index, where we made lower highs since basically mid-September, even though we made higher highs on the price chart. So we had negative divergence, and that was basically forewarning us that potentially we could see a top forming. This is now happening. But to be sure it's a top, what I would like to see is also a fall through Friday's low, just to confirm. So if we fall through Friday's low on the daily financial bet, that was made at 40,630, then for me that's definitely a top formation, stop loss above the high, and the next downside target would be the high seen back in May here around 36,622, or perhaps even lower than that. So we're potentially topping out. Now, some of you might say, hold on a second, we are already topping out. Technically speaking, short term, that may be the case, because basically what we're seeing here, let me just put a trend line on here, a support line. Let me get this one off first. And we can see that we basically did fall through an uptrend line here. That support line here was fallen through. We didn't close below it, and then on Friday we closed below it, and as you know, what I like to look at, the last relative low on the left of our chart. So if we move left on the chart here, we can see the last relative low, which coincided with the low from the 26th of September. So the fall between these two lows and a close below there means that basically this may well be already a sell signal, and we may already have fallen through the neckline and could go down again. And just be careful not to read too much into today, because it's Columbus Day in the US, and not all markets are open, and perhaps if they are, the volume will be less than usual. So be careful. But basically, technically speaking, it is in the process of perhaps topping out. That view will only be negated if we were to rise above Friday's high. Because in that case, we're going back above this breached uptrend line and back above Friday's high from where this down move started. And Friday's high on the daily financial bed was made around 44,258 or so on the daily financial bed. So basically, this is the scenario. If we go above Friday's high, we're probably going to make new highs again and go higher still and retest the record high. If we fall below Friday's high, we may see a consolidation phase. And don't forget, quite often in October, we do have markets coming down a bit. So last week's Trump-induced sell-off on Friday might be something that usually happens. We'll have to see what the next few days bring or not. Gold. You've just listened to gold, a lot going on with regards to gold. Peter Hambro telling us a lot about it, very interesting indeed. But basically, what we can see is just a series of higher highs and higher lows. And that's why I never like to sell into a rising market which trades in all-time highs. Why? Because it can just continue to get higher and higher and higher. And I know a lot of people say, well, no, it's so overbought here, it has to come down. No, it doesn't. Look at it. I mean, we had, 2 days in mid-September, then back up again. Then 1 day on the 24th of September, back up again. And then 1 day on the 2nd of October, back up again. Last week, yes, we went above 4,000. It should have consolidated. It did a bit. But as Peter Hambro said, basically 9th of October, another buying opportunity, trading in all-time record highs again. Now, what is interesting is, I haven't got this on this chart here, or maybe I do, but my technical upside target on the monthly chart, on the long-term charts, is a 261.8 Fibonacci extension, which comes in at $4,308 per troy ounce. $4,308 per troy ounce. That is my technical upside target for the next few days and weeks. So that's the target I've had in place for, I don't know how many months now, but since the beginning of the year, that's for sure. We had one below, as you remember, around $3,750. That got hit already. So the next upside target for me, technically speaking, 261.8 Fibonacci extension at 4,308. If you want to learn more about it, read my article I wrote last week, I believe. You can find it on the IG website or platform. Just Google my name or gold, and you will find my article on gold, and you can see how I explain and how I calculate the 261.8 Fibonacci extension. So gold, as you can see here, looking very, very bullish, and it's likely to continue to go higher than revert to the downside. Oh, before I say that, except, because we always have to play with probabilities, don't we? Except if we were to fall through our uptrend line. So what is the uptrend line? Well, you can see here, I need to redraw that one because I can't have any data going through it. So that the steepest one is this one here. And basically we would have to fall through this uptrend line and to fall through Thursday's low, which on the daily financial bed was made at 3,943 for us to form a top, at least short term. So as long as we stay above Thursday's low, the trend is your friend, it's still looking bullish. But yes, let's look at Alphabet. I had a question on Alphabet. And again, a 24-hour chart, we can look at Alphabet and we can see that it looks quite similar to Tesla in that we have come off our high. And let's just look at the monthly chart. This is a record high we made in September. You can see that here, acceleration to the upside. But if you look at the weekly chart, we started to come off over the last 3 weeks. The closes were below the highs. And now on the daily chart, what we're seeing is a gradual decline, but it may be an ABC correction. So what do? Well, basically we have a trend line here in place, but it's a very flat one, so I wouldn't read too much into it. But if you can see here, that is the uptrend line from all the way down there. But if you have an accelerated uptrend line, this one we could probably draw in only from here without any data going through the chart. Sorry, I need to redraw this one. So let's just do this one here. So what we're seeing now, let me just zoom into this because it is quite interesting, is the following. Accelerated uptrend line, break on Thursday, then on Friday a fall through the uptrend line, close below it, which we already saw on Thursday, but close below the last relative low as well. So here also likely that we are seeing a topping formation, but it could just be an A, B, C correction, in which case we would continue and make new record highs. So same story as on Tesla. Basically, what I want to see for a top to be confirmed from a sort of more medium-term perspective is a fall through Friday's low, in which case we may retrace all the way back down again towards the highs seen sort of in mid-August, and that's around 20,650 or so, which is a possibility. Or we rise above not just Friday's high, because Thursday's high was a relative high here. We need to rise above Thursday's high of last week. And that on the daily financial bet was made at 24,759. So it's an either or scenario. But for me, it does look a little bit toppish here. It could well head lower again. But yes, unless we take out Thursday's high, for me, the odds would still be, because we closed below the last relative low, that this is not just an ABC correction, but that we are starting to top out. So perhaps look at your trades in that perspective. Whatever you do, you can have a trailing stop. You can get perhaps out of some of your position, but let the rest run, and then just re-add to your longs in case you're long if we go above Thursday's high. It's really up to you how you manage all that. Right, we've got lots of other ones to cover. Let me just go through the other questions I had. Anglo-American. And as I said last time, those who send the questions in first, I will go through. And then, you know, if you send your questions later, I might not get to it. But basically, Anglo-American tobacco looking very, very bullish as well. On the monthly chart, on track for our third consecutive month of gains. We've now risen above the May 2024 high. That is bullish in itself because we closed above, where we may close above it this month. We didn't do so last month. You can see the close is slightly below this high here, but that's all bullish. We've broken through a downtrend line. That is also bullish. So all of that, you can see this downtrend line, by the way, is incorrect. Why? Because yes, we had these highs going through there. So what I should have done here is, and that's what I'm going to do now, is redraw my trend line correctly so that no data is going through the trend line. And then you can see here we had the trend line. Actually, I need to do it through this one as well. So you need to be quite pernickety if you want to draw your correct trend lines or resistance lines, because otherwise they don't mean much. So here we've got these highs, nothing going through there. Then the reversal, the rise above the previous high, the relative high, and that gives you the buy signal. So on the monthly chart, bullish. On the daily chart, clearly series of higher highs, higher lows, bullish. If you're a very short-term trader, maybe your stop is below Wednesday's low of last week. If you're a medium-term trader, you've got all of these highs here now acting as support. So we would really have to take those out for us to be negative again. So your stop would probably be either here on the 18th of September low, or if you want to have an even more wider one, perhaps below the early September low. But basically, the trends, your friend Anglo-American is looking bullish, is likely to continue its uptrend. Let's see another one. I don't know what. Okay, UUU. Which company do you refer to? Somebody asked about UUU. Oh, UUUs, 4Us. Okay, Energy Fuels Incorporated. I haven't come across this one, but I like the chart because it's looking bullish. Can you see here? Clearly heading higher. Let's look at the monthly chart because we don't know this one. Whoa, that is a very interesting company. It's not only on track for its 7th consecutive month of gains, but it's accelerating to the upside. So this one is very, very bullish, and there is no reason to not buy into this still. I'm not giving advice, by the way, but from a technical perspective, it still looks bullish. So any retracement is probably a good idea to get in because it's getting parabolic, and these things can just last longer than you think they do. So yes, very, very bullish. And if the question is, has it topped? Well, no. It might have topped if we fall through the last relative low. That is the 30th of September low. Unless we do that, right now, it's just accelerating to the upside. So it's far from topping out. So yes, I mean, still looking bullish. And to me, that's a buy. That's not a sell. And look, even on the relative strength index, we're not even as overbought as we were in July of this year. And look what happened since. So the trend is your friend, still pointing higher. Now, the Nasdaq after Friday's crash, it was interesting because Chris, my colleague at IG, Chris Beecham, got calls by the press over the weekend. And yes, we do work weekends sometimes. And basically it was asked, is this the beginning of a crash, etc. And he clearly, well, was right in saying, no, it probably isn't, because, you know, if everybody asks about it, it's not going to happen. Crashes happen when people don't expect them to happen. Right now, everybody's expecting to happen, and well, not everybody, but a lot of people are. So for me, that probably isn't a top here. And if you look at the monthly chart, I mean, look at the Nasdaq. We are trading at record highs. We've seen 6 consecutive months of highs. Yes, it may soon lose a bit of upside momentum, but even on the weekly chart, it was negative last week. It may be a short-term top, and it may turn into something like this. But right now, it could also just be something like this, where we come down and then trade sideways, go down a little bit, and then make a new high. So we don't know yet. All we can look at is the price action and what it is telling us. So what is the price telling us at the moment? Well, we've fallen through our uptrend line on the weekly chart, but we haven't fallen through any relative lows here. So unless we fall through the September low, the early September low, that to me is still an uptrend, because all it could do is basically just, you know, make the trend line less steep. Let's look at it. It could be something like this now. Who knows? But having said that, what is important is Friday's low. Because you can see that's Friday's low, which was made, interestingly enough, around the mid-August high, because that acted as support. And since then, we've seen this rather important bounce. But as I said, careful, this is Sunday session, so that's IG, you can't really read into this. This is today's session, but it's Columbus Day in the US, so not much going on there. So what can we see here? Well, basically, Friday is our reference point. Why? Because that is the big candle against the trend. So if we were to fall through Friday's lows, then yes, we could see a further decline. We could see the Nasdaq topping out, and we would see that on a lot of other stocks, as I just showed you on Tesla and Alphabet as well. So look at Friday's lows. Having said that, as long as we stay above Friday's lows, the trend is your friend, and it's still looking bullish. Now, you might say to me, hold on, Axel, we've fallen through an uptrend line, and we have. I mean, if you look on the daily chart, we have fallen through the accelerated uptrend line, but this line here is less important than the longer term ones. So what happened on the accelerated uptrend line here is a fall through it and a fall through the last relative low here, and we closed below it, so that is negative. And such a big candle usually is negative, and you would usually see a continuation of the downside. But as I say, in order to confirm it from a sort of more medium-term perspective, I would wait for a close below Friday's low, in which case I would probably lighten up on my long positions. If it were to make a new high here above Friday's high, we're trading all-time highs anyway, the trend just is going to continue. But that is what's going on at the moment. Am I at the moment thinking, oh, it's going to be a huge crash? Well, we don't know. And unless Friday's lows get taken out, the odds of this happening are less likely than the trend to continue, because the trend is your friend and most of the time it's going to continue. So watch Friday's price actions, the high and the low, to give you a better indication of what might happen next. Next question is BMW, and I love BMW cars. Well, I love German cars in general, but anyway. Bayerische Motorenwerke, if you look at BMW, they're not doing so well. And the German economy is actually not doing so well either, having been in and out of a recession over the last 2 years or nearly 3 years now, but obviously being at a very, very high base. I mean, I wouldn't mind living in Germany in their recession compared to other countries which are growing. So having said that, BMW is not doing well. Why? What we can see here is potentially a head and shoulders top. Why is it head and shoulders top? Can you see here? That's the left shoulder, this one here. That's the top, the head. Move down, right shoulder here. And then we're moving down. And the important thing here is we have what is called a neckline, which is connecting the shoulders this one here. So this one's sloping down, this low here with that low. And we fell through that last week on Tuesday, but actually confirmed it on Friday. That's negative. And it may well mean that this head and shoulders top is in place now, and the distance from the head to the neckline is where our target is. So you take that whole distance here, project it to the downside, and that takes you back towards the lows seen in June of this year. So on the daily financial beta, around 7,150. So that's the pattern. But let's look at the price action itself. What we saw here is basically the BMW share price trying to retest its high, failing at previous highs, and then within one day on Tuesday, so not even Friday with the US tariffs threat with China, but on Tuesday of last week, we basically took out the previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. That is a lot of days of price action which has been negated in one single swoop in one day. Therefore, this break of the uptrend line and the fact that we fell and closed below the last relative low, which was made on the 20, well, that's the daily, the Sunday session, so it would be this one here because I ignore Sundays, the 16th of September low is negative. So even if short term we were to bounce back, this is probably one I would sell into because the trend here has shifted. And it's very likely that the momentum to the downside will continue in the near future from a technical perspective. Now, if we were to rise above Tuesday's high, then this view would probably be incorrect. Why not? You could use the next higher high, the relative high, yes. But if you have a big candle like this, a really long one, which is taking out a lot of different days beforehand, then quite often the move above that candle itself is really a signal that the trend is continuing. In this case, the uptrend was the trend. So that would be a continuation of the uptrend. But that to me looks far less likely than on any other charts we looked at, for example, the US ones on Tesla, Alphabet, or the NASDAQ just now. So BMW does look toppish here and not that great. So another question is the German stock market, the DAX 40. You know that I love trading this one. Again, really big negative candle here, taking out lots of previous days, and we're bouncing back quite significantly here, but quite often around the midpoint of these Marabuzu patterns, you can often sell into them, and quite often the market then stops going up here. But again, the story is similar. If we were to fall from a longer term perspective through Friday's lows, which on the daily financial bet were made around 24,000, then it's likely topping out, and we are likely then going to retest the August and the September lows, and if those give way, we could really top out. If, however, we were to grind higher again and go over Friday's high, then it's very likely that DAX is going to make new record highs again, and we are just going to ignore this move. But because of the big shift to the downside on Friday, for me, the odds are still slightly higher that we will just fizzle out here and head back down again on the DAX 40 as well. So I believe that this could be a topping formation here. I don't know. All I do know is, look, we have tested all these previous highs and again failed at previous highs, even though we made a new record high short term. If we go on to the relative strength index, we will see that let me just get it up here. We did not have a, let me just put it on to my 9 periods instead of 14. As you know, I prefer 9 periods. And on the 9 period, we can see what we couldn't see, I believe, on the, let me just double check this, looking at it more closely. But yes, on the 9 period, we made a lower high compared to the high seen on the 2nd of October, yet we made a higher high on the price chart. And that was, again, negative divergence, a warning that we could see a reversal. That has now happened. Maybe this is already it. I don't know. But I'm going on holiday on Friday. I won't be here for 2 weeks. And I can tell you, I'm not going to run positions when I'm off on holiday. And I think I'm going to get out of my DAX longs here because it is looking a bit more dangerous than it did just a week ago. Thank you very much for watching Technically Speaking. Obviously, I didn't give any trading advice here. I just gave you my personal views. And thanks for watching. And I'll see you again in early November. Thanks and goodbye.